Did you know that FP&A is one of the most common career paths to becoming a CFO? Now, before we get ahead of ourselves, there's a lot of misconceptions and confusion about what FP&A is. And so having worked as a financial analyst myself, I'm going to go through everything you need to know as a beginner looking to get into the industry. I will first provide a brief overview of what FP&A is, then go over key responsibilities of a financial analyst, the skills required, the corporate structure of the team, compensation, work-life balance, exit opportunities, and education requirements. Hello and welcome back to the channel. If you're new here, my name is Andrew and I'm a certified public accountant and former financial analyst. And on this channel, we explore data-driven strategies to help us achieve financial independence. All right, so what is financial planning and analysis? FP&A is a set of planning, forecasting, budgeting, and analytical activities that support a company's major business decisions and overall financial health. Most companies, no matter the industry, have an FP&A department that supports the company's strategic goals and helps the CFO, CEO, and other key executives make informed decisions. To use an analogy, if a car represents a company, FP&A assumes the roles of the headlights to let you know where you're headed, the steering wheel to navigate direction, the seatbelt to protect you if things go wrong, and the GPS to analyze various routes or scenarios and come up with the best option to reach your desired destination. Essentially, FP&A provides strategic direction, ensures financial stability, and drives sustainable growth for a company. So how do FP&A professionals actually achieve this? Budgeting and forecasting. FP&A professionals are responsible for creating and managing the company's annual budget and monthly forecasts. This involves analyzing historical data, understanding market and business trends, and collaborating with various departments such as sales, marketing, and operations to forecast future financial performance. During my time as a financial analyst, I was responsible for forecasting sales for one of the company's revenue channels based on our pipeline, business trends, contract negotiations with customers, and data-driven analytics. Budgets and forecasts are done for all line items on the P&L and are often completed at lower levels of detail, such as by business unit, product line, or business division. Accurate budgeting and forecasting are crucial for enabling the proactive management of revenues, expenses, and cash flow. Financial modeling. Financial analysts build dynamic financial models to simulate different scenarios and predict the impact of various business decisions. These models help in identifying risks as well as growth opportunities. As a former financial analyst, I built several scenario-based models in Microsoft Excel, including the company's 5-year plan, by analyzing historical performance and leveraging realistic growth assumptions to create a base case, best case, and worst case scenario for the company's future financial performance. Variance analysis. After successfully creating the company's budget and forecast, financial analysts also compare actual financial results to these benchmarks to identify discrepancies and understand the reasons behind them, whether favorable or unfavorable. This analysis helps identify areas of improvement, cost-saving opportunities, and operational inefficiencies. For example, if revenues for this month is lower than the budget or forecast, you would need to investigate the reason for this. Were sales volumes for a specific product line lower than expected, or is the industry as a whole facing headwinds due to macroeconomic factors? It's important for FP&A professionals to perform variance analysis and investigate the reasons for the unexpected variances. Management reporting. Preparing regular financial reports and slide decks for management, key executives, and the board of directors provides insights and essential data for decision-making processes. The management team relies on weekly and monthly reports to assess the financial health of the company, evaluate performance, and make informed strategic decisions. Strategic planning. FP&A professionals regularly collaborate with senior management to develop long-term strategic plans and initiatives. They provide financial analysis and insights to support strategic decision-making and ensure alignment with organizational goals. For example, if a company wanted to focus more on a direct-to-consumer model instead of wholesale, the FP&A team would analyze consumer data and forecast how this shift in strategy would impact sales volume, profit margin, etc. Capital allocation. Assessing investment opportunities and recommending the allocation of resources to projects or initiatives is another responsibility of the FP&A team. This involves evaluating the potential returns of larger projects as well as the potential risks associated with them, often referred to as a cost-benefit analysis. Whether it's evaluating investment proposals, pricing strategies, or expansion plans, FP&A helps stakeholders make informed decisions based on data and analytics. And 7, performance analysis. FP&A professionals also spend time analyzing the financial performance of different business units, products, or regions to identify areas of strength and weakness. This includes profitability analysis, cost analysis, performance metrics tracking, and more. These types of analyses help in optimizing resource allocation and improving overall profitability. Depending on your role within the FP&A team, you may be in charge of all, a few, or just one of these key responsibilities. Now, when it comes to the necessary skills required to excel as a financial analyst, you need to develop a good mix of both technical and soft skills. You have to be able to read and truly understand a company's financial statements, which are the balance sheets, cash flow statements, income statements, and in the case of public companies, the shareholders' equity statements. A good analyst not only understands the meaning and implications of each individual financial statement, but also sees the larger picture of how a company's total financial position is reflected by the combination of assets, liabilities, cash flow, and income. Proficiency in Microsoft Excel is also required, as Excel is a fundamental tool in budgeting, forecasting, and financial modeling, and is also often used for data analysis and creating reports. Experience with business intelligence tools like Tableau and Power BI are also preferred, as these tools help with data visualization and make it easier to analyze larger amounts of data. Strong analytical skills are also desired in order to effectively interpret financial data, identify trends, and make sound financial decisions. And lastly, soft skills like the ability to communicate complex financial information in a clear and concise way is another essential skill. Now, the corporate structure of the FP&A team can vary drastically depending on the size of the company. In an early startup or small business, the entire FP&A team can be made up of just the owner, CFO, or controller. On the other hand, larger corporations have a more complete FP&A department, usually headed by the Director of Financial Planning and Analysis or the Chief Financial Officer or CFO. In the largest corporations, the team consists of both, with the Director of Financial Planning and Analysis reporting directly to the CFO. Now, in a company with a large FP&A department, entry-level financial analysts work in small teams managed by a finance manager or director. In the largest Fortune 500 companies, entry-level financial analysts often focus on one single product line or division. For example, if you work as a financial analyst at Google, you may be hired into the YouTube, Android, or Google Cloud finance team and produce all the relevant analyses and reports for that specific business unit. When looking at employment opportunities as a financial analyst, it's important to consider what sort of role and environment you'd be happiest and most comfortable in. Some people prefer a large corporation with clearly established career paths and the opportunity to gradually climb that corporate ladder at a well-established company. Others prefer helping a startup or smaller company navigate its way toward rapid growth, even if it requires wearing a lot more hats when it comes to job responsibilities. Now, in addition to working closely with other members of the FP&A team, as I previously touched on earlier, financial analysts work closely with various stakeholders across the organization, including other business units such as the product, marketing, and operations teams to support financial planning and decision-making, as well as provide insights and recommendations to senior leaders. When it comes to compensation, the pay for financial analyst roles can vary substantially depending on factors such as the company size, industry, location, and years of experience. Larger companies often pay more than smaller companies, as they often also offer RSUs or stock options as additional forms of compensation beyond the base pay. In regards to industry, the tech and financial services sectors often offer above average compensation. For location, larger cities like New York, Los Angeles, and Chicago generally offer higher salaries to offset the higher cost of living in those areas. And obviously, your compensation increases the more senior you get, both in terms of base pay and other forms of compensation like equity, bonuses, and other benefits. Speaking of bonuses, they are usually dependent on both the company's profits as well as your own individual impact on the company, and generally ranges between 5 to 15% of your salary at the entry-level position. According to the Bureau of Labor Statistics, the median annual pay for financial analysts was just under $100,000, with the lowest 10% earning just less than $61,000 and the highest 10% earning just more than $175,000. Since this is a very broad range, I also just wanted to share specific salary ranges that I have seen based on people that I've talked to, my own experience as a former financial analyst, and other research I've conducted mainly in the Chicagoland area. Entry-level positions in Chicago usually range anywhere from $60,000 to $100,000 depending on the company and industry, although there can be outliers. At the senior level, usually after 2 to 4 years of experience, the salary can progress to anywhere between $80,000 to $150,000. Beyond that, you start to get into the higher positions such as finance managers, finance directors, and VPs of finance, but estimating those compensation levels becomes a lot more ambiguous as bonus structures, equity, and other forms of additional compensation vary drastically between companies. When it comes to work-life balance, it can vary slightly by the culture of the company you work for and the volatility of the industry you're in. There are spikes in workload during the budgeting season, which if the company you work for follows the calendar year, will generally be from August to December. However, even with budget season, you can expect to work on average 40 to 50 hours within most entry-level financial analyst positions, which is a much better work-life balance than many other finance careers. In fact, that is often one of the main selling points, which was the case for me when I transitioned from consulting. In terms of potential exit opportunities, there's a good amount of disagreement about the range of existing opportunities coming from corporate FP&A. A majority of corporate FP&A analysts remain in the industry and climb the corporate ladder within their own company or by moving to another company that offers higher pay. Approximately 10% of corporate financial analysts eventually transition themselves into the field of either investment banking or private equity. Another 10% move into some other area of corporate management, such as sales and marketing or human resources. And actually, about 20% of financial analysts end up going into business for themselves, becoming private business consultants, or starting their own companies. With all that being said, to work in FP&A to begin with, you typically need a bachelor's degree in finance, accounting, or another related field, so be sure to click this video here to learn about the differences between a degree in finance and accounting, as well as other career opportunities available with each degree. And that's all for this video. Thank you all for watching, and I'll see you in the next one.